Good afternoon, everyone, and welcome back to Avon Pension Fund Investment Panel. It's Councillor Sean Stevenson-McGaw. I'm the chair. We've just had a discussion on item 9 on the agenda, which is the Brunel Pension Partnership update on pooling. And I would like to now see if there is a proposer and a seconder for the motion that we note the progress made on pooling the assets. And in 2.2, we note the project plan for the transition of assets.
So moved, Chair.
Thank you very much, Councillor Shearn. And I see Councillor Dando is seconding that. I will assume this is carried unless I see anyone typing in the chat function that they are either abstaining or against noting those two items. Nope, so that is moved. We have noted item 9, and we can move on to item 10 on the agenda, which is the review of investment performance for the period ending 30th of September 2020, and our Avon Pension Fund Officer Nathan Rollinson will introduce this item. Over to you, Nathan.
Sure, thank you very much. So Mercer are going to kind of touch on performance and talk us through their exempt appendices as usual, but maybe before they do, I can just kind of pick up where Liz left off on the responsible investment agenda, and specifically how climate changes and activity around climate change has ramped up recently. So I just wanted to bring to your attention the fact that last week we saw the UK government confirm they're going to be issuing their first green sovereign bond next year, which is kind of designed to scale up the UK's drive to net zero and directly finance green projects and increase jobs in that sector. And as you might expect, Brunel have been both early and quite vocal in their support of this project. And we also saw a pensions bill pass through Commons calling for kind of enhanced reporting and disclosures in relation to climate change from schemes. And we actually have a paper next on the agenda that recommends we adopt TCFD or Task Force for Climate-Related Financial Disclosures Aligned Reporting. And then the last example I just wanted to bring up was this push that we've seen from the government as part of their 10-point plan into quite kind of early stage technology, so specifically carbon capture and green hydrogen. And we see the portfolio through Brunel and its underlying managers as being well positioned to take advantage of some of the opportunities that come out of that. So clearly there's an awful lot happening behind the scenes. And for those of you who are on the Brunel investor calls over the past couple of days, you probably got a sense of their level of involvement in a lot of these initiatives. And then for those of you who weren't on the calls, I can send around a copy of the slide packs for kind of general consumption next week, so everyone has access to that content. So that's all I wanted to say, really. So maybe if I hand over to Stephen Ross to talk through performance before we move into exempt again.
Thank you.
Yep. Okay, thanks, Nathan. I'll just share my screen, hopefully. So in Q3 overall, we saw a small positive return for the fund, and so you're now above the 5 billion mark. So a lot's been sort of happening in markets and politics recently that you're sort of all familiar with. So I thought I'd actually sort of say a few words about what our views are on sort of the key asset classes looking ahead on a sort of 1 to 3 year basis. Now, firstly, on equities, although we do recognise that there's significant risk of seeing a drawdown between sort of now and the next 12 months, say, because of ongoing uncertainty regarding lockdowns, on a sort of 3-year view, we are actually sort of fairly sort of constructive on equities, and that's within sort of developed market equities, emerging market equities, and small cap. Which you've all got exposure to now with the Brunel funds. And the key reason for that is because of interest rates remain low. We are aware, or we are sort of mindful of potential sort of risks to inflation moving upwards, but inflation is generally sort of fairly sort of low at the moment. But what we're expecting next year is a lot of pro-growth policies and additional spending from central banks and governments, which we do expect to be supportive of return-seeking assets. And that also sort of follow-throughs into the area of growth fixed income. So that's multi-asset credit. That's been a sort of strong performer recently. Credit spreads have come down quite a bit, but we still think the overall sort of macro position is supportive of further returns. The one asset class that we've got exposure to, which we continue to see probably means most challenge in outlook, is property. And that's due to the exposure within the property portfolios to particularly COVID-related sensitive sectors such as hospitality, leisure. So the level of rent collection in most property funds is in the sort of range of 60 to 80%. And then sort of longer term, we do think there is going to be this ongoing question mark regarding the office sector. And so clearly, as a result of COVID, I think a lot of companies are going to be reviewing their use of office space. So we do think that is an issue to consider. And I know sort of Brunel are certainly aware and sort of monitoring those issues. So overall, we are actually sort of fairly constructive on the return outlook for a lot of the return-seeking assets. That should bode well in the portfolio, but there could clearly be some reasons for why we get volatility, and that I think that does back up the reason for why we're looking at the systematic equity protection strategy. And so just moving on to performance on this slide. So we're still very much in a period of transition because of all the assets that have been sort of passed on to sort of Brunel. Clearly some sort of really good progress has been sort of made there. And so in Q3, we saw quite a few of the funds that you invested in outperform their benchmarks. So Brunel UK Equity, although we don't have any exposure there. Brunel Global Alpha Equity, that's been doing sort of particularly well. And pleasing to see outperformance in emerging markets. And you can see what the performance has been over the 1 year period. Again, a lot of the funds are still relatively new, so not possible, I don't think, to make any sort of meaningful conclusions just yet. So before I say some more comments, is there any particular questions on the performance? No. So the other point I'd like to make is we've been talking to sort of officers about redesigning the performance report that we currently do for you, because we're going to get to a point where I think a lot of your reporting needs in terms of performance of the funds should be covered by Brunel. So we don't need to overlap with what Brunel are doing. It clearly doesn't make sense for a cost and efficiency perspective. So we're going to start to think about how we can redesign the portfolio to be much more focused on strategy. So I think that will link well with your sort of risk management report, but we'll be thinking about, okay, how can we help you monitor in terms of the asset allocation and really looking at the returns that we're getting. So are the returns that we're getting, say global equities, are they actually sort of in line with our assumptions? So looking to sort of see and help you monitor, are you actually getting the returns from your strategy needed to support the funding plan? Are those returns in line with your sort of volatility, your sort of risk tolerances, and also looking at sort of level of income that we can get from those assets and how that fits with your sort of ongoing cash flow needs. So you might see the current format of the report maybe one more time. We'll have to sort of chat about that with Liz, but I think certainly going into early part of next year, you should expect to see a redesigned format report. And along with that, hopefully you'll see reporting from Brunel that meets your needs too.
Thank you very much, Steve. Does anyone have any questions or comments on Appendix 1 or Appendix 2? No, shall we, do we need to go into exempt session for 3, come back for 4, and then go back into 5, or do we just go into exempt straight away?
Unless anybody's got any questions on the Brunel quarterly performance report, which I don't think anyone necessarily will, because there aren't any issues.
Sure.
I'll take those now before, and then we can just go into exempt.
No
so
problem.
If anyone does have any questions.
Okay, so that's Appendix 4 of item 10. If anyone's got any questions on the Brunel quarterly performance.
I just to let you know that in fact Client Group and Brunel are reviewing all the Brunel reporting, because we have said that it's not necessarily what we need.
Yeah, brilliant. Thank you very much. So in that case, if there's no questions on 1, 2 or 4, I'm sure colleagues will have questions on exempt Appendix 3 and 5. Therefore, deep breath. The panel, having been satisfied that the public interest will be better served by the non-disclosing of relevant information, proposes that in accordance with the provisions of the section 100 (a)(4) of the Local Government Act 1972, that the public should be excluded from the meeting for this item of business because of the likely disclosure of exempt information as defined in paragraph 3, part 1 of Schedule 12A of the Act as amended. I will assume everyone's in favour of that unless they notify in the Zoom chat. No, so we'll be moving into exempt. So thank you very much for everyone who's watching. We will